Hello traders, the title of the video is how to use moving average 20 to revive Elliott wave strategies. Alright, if you look on my chart here, I'm on a monthly chart. This strategy is quite powerful on a monthly chart for those of you that are swing trading and position trading. As an Elliott wave trader, try to place the moving average 20 on your chart. I will change the color of my moving average 20 so you can all see clearly on my chart. In fact, hold on, please make it very big. That's my moving average 20, all right? That's the one that you see there, the blue line there. And I always color the moving average 200 also in blue. But for today, I will change the color of my moving average 200 into red, all right? Okay, so that's it. So the blue line is the moving average 20. How to use moving average 20 to revive Elliott wave strategy. First and first, all right? Most impulse wave. So when we are talking impulse wave for new trader, we are talking about the first wave, the third wave, and the fifth wave. And also, when we are talking multi wave, we are talking about first, second, third, fourth, fifth wave all together. Don't get confused if you are a new trader. So if I draw my chart very fast without too much long story, we don't want to annoy the more experienced traders. So before they run away, let's do it very fast. Okay. Not done. So the first wave is a multi-wave. The third wave is an impulse wave. So impulse wave, we mean also multi-wave. Impulse wave or multi-wave, we are saying almost the same thing. Third wave, multi-wave or impulse wave. Fifth wave is a multi-wave or impulse wave. Now, those are three specific impulse or multi-wave. But again, from the first wave to the end of the fifth wave, talking about the trending phase, is also referred to as an impulse wave or a multi-wave. It's a bigger multi-wave, it's a bigger impulse wave. All right. So what we are talking about now, we're talking about the moving average 20. Generally, if the bullish momentum is strong and the price is going up normally, what do I mean by price going up normally? Now, traders have been following us at most of the traders at Day Pro Trader will know what I mean by price going up normally. If the price is going up normally, the price will go up diagonally like this. It will be going up gently like a plane taking off. That's how what I mean by price going up normally. Sometimes the price can go almost like this, becoming a little bit vertical. So this is what I mean. So if the price going up normally during an impulse wave, it usually stay above the moving average 20. It's something that is happening all the time. And the second thing I want you to understand is that most financial instruments that are very, very bullish, all right, established blue chip stock that the investor I just want to buy because they are creating this in the problem. Usually you see that the multi-wave will stay above the moving average 20. Don't be surprised. Sometimes the price may go below the moving average 20 and you will try to find support near the moving average 30. Am I saying too much into them? So just remember that. So impulse wave very often will stay above the moving average 20 and trader will try to buy along the moving average 20. One thing you need to understand also, because the market is now full of trading robot, trading software, okay, algorithmic trading tool, and now we are talking about artificial, intelligent, artificial intelligence trading tools. All right, those trading tool can buy, can place orders along the moving averages carefully. As the moving average is going up, each end of the moving average, there can be order placed there. So they are waiting to buy along the moving average 20 if they know that the momentum is strong. All right. So how can we use the moving average 20 to revive our Elliott wave count? So sometimes the moving average 20 can help us to find those impulse wave very quickly. Now, if you look on this chart now, okay, so a lot of traders that are watching this video today, all right, whether on Facebook, our stochastic MACD Facebook, stochastic MACD Facebook, or on YouTube, 24 Elliott Wave YouTube channel, all right, they will say this is the first wave. Anyone disagree? Don't put your hands up, all right? Don't do that, because other trader may count down on you. Don't put your hands up if you say this is not the first wave. All right. Second wave, everybody agree? So now, everybody will agree to that so far, okay? But then, when we start going in this session, all right, some traders, which is okay, it's not a big mistake, it's not a violation of sign, may say, George, this is the third wave right there. Okay. When traders say that, personally, what I do, I quickly pull out my Fibonacci extension. Now, if you are subscribed to our channel, you will know exactly what I'm doing now, and we're going to watch it. Okay, it breaks above that 138.2% Fibonacci extension on the first wave. So it is okay that some trader may say this is the third wave, and then they may say, George, we are now in the fifth wave. Do you agree with that? Do you agree with that? Okay. Another thing that can help traders to avoid mistake is that, okay, you may agree with it on the monthly chart, but you don't want to stop on the monthly chart alone. Now you want to go to the higher degree to see the bigger picture and see whether it's what I'm saying on the monthly chart, is it making sense, all right? On the yearly chart, on the higher degree, all right? But the point I'm making to you, I disagree that this is the third wave here. I disagree. And also, you can disagree with me and say, George, you are wrong. That's fine. That's fine. All right? It's okay for friends to disagree. So you can say, George, I stick to my wave count. That's fine. You can stick with it as long as you are not violating the market pattern and there is no Elliott wave violation. You can get away with that. That's fine. But the reason why I'm saying to you that this is still the third wave going on here, how do I know? Just looking at the chart straight away, I can see that, you see how the moving at 20, you see this move from here, from the second wave, it just stayed above the moving at 20. It didn't break it so far, did it? Didn't. You see, now it's, because the moving average need 200 pieces of candlestick bar, that's why it's here now. Okay, it can be here now because we need to count 1, 2, 3 up to 200 before we have 1 point of sorry, I'm talking about moving at 200, which is far away here. I'm talking about we need a 20 bar to have 1 point on the moving average 20, because it's average of 20, isn't it? Every time we have 20, we have 1 point. So that's why it's here now. Okay, but the point I'm making to you, looking at the moving average 20, I'm using here simple moving average 20. All right, doesn't matter. We use the simple moving average. Okay. Just looking at it like this, I know that this move here, all the way up here, the way you respected it, because what is happening, trading algorithm, trading software, artificial intelligence trading tool, blah, 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 professional, they were just buying along the moving average 200. You see how, do you think that it's just by chance that the price stay above it? You see how they are buying along nicely? That's what's happening now, you see? So it's telling me clearly that impulse wave that is starting here, all right, is still the same. So it's the third wave. That third wave can be subdivided into 5 manual waves, that's fine. But calling it somewhere here just as the real third wave of a higher degree is a mistake. So by using the moving average 20, sometime you need to train yourself, all right? So you may make sometimes mistake. Don't just use it like it's always like that, all right? Don't say that it's always like that. It's not always like that. It's often like that, all right? Don't say always, all right? It's often like that, all right? So you don't get into this 1 + 1 = 2, okay? I don't want you to think that way. So that's what I'm saying to you. This is the third wave. So with the moving of the 20 here, was easy for me to spot that we are still in the third wave for United Health Group Incorporated. That third wave from 2009 can be subdivided into 5-man wave, which we can count, but I don't want to dwell on that now, you see. And also, you can see that the first wave, you see how the first wave stay above the moving average 20. So one thing that is coming to my mind, which I want you to also to train your mind to spot it very fast. Now, looking at this stock, United Health, I can deduct that it's a bullish cow. It's quite bullish cow, and the investor love this stock, and they just keep buying it. The bullish investor love buying it. And one of the characteristics, or anytime you are using the Elliott wave or you are looking at a chart, you want to deduct quickly the characteristic of that stock. The stock is a bullish cow. That's the way I like to call it. All right, the bullish cow. All right. Now, and also it stays. People are buying that stock along the moving of 20. So I can create, if you allow me, a profile for this United Health. A stock that is bullish cow that usually people are buying along the moving average 20 on the monthly chart in an uptrend. You see, so the first way is stay carefully above the moving average 20. And when we went into the second wave, you see, they were selling along it again when it was turning down. As soon as it started rising again, they are buying along it. So you see, so corrective waves of a dynamic bullish financial instrument very often, not always, can stay below the moving average 20. As a new impulse wave is beginning in an uptrend, they will go above it. In a downtrend, you see that the bearish impulse wave will stay below the moving average 20, and the corrective wave will go back. The rally in a downtrend will go above the moving average 20. And you want to, especially now, the strategy that we are discussing today is quite solid on the monthly chart. The reason why I'm saying that is that a lot of traders will watch a video like this and they say, yes, I can do that on the 5-minute time frame, on the 15-minute time frame, on the hourly time frame. And then it's not as solid as it was on the monthly chart. Okay, and then they start dumping things away, and they go again and look for another trading method, and it's just endless quest looking for that holy grail. All right, so you don't want to waste your time, because time is life. You don't want to waste your time doing that. Okay, so this is quite easy to trade. First wave, second wave, we are still in the third wave. If we quickly try to go to the next higher time frame, so I go to the yearly chart. You can see here on the yearly chart. Can you see that? You see, now it's clear on the yearly chart. See, first wave, second wave. Here it is going up. It's a third wave. But on the monthly chart, some traders may say, oh, third wave there, fourth wave, and this we are not in the fifth. We are not yet in the fifth wave at all. This is just the third wave. And then we will have another lead. So what I will do now, I'm trying to be careful so I do not. So are you getting it now? All right. If you get it, I'm a happy person. So now I'm going to apply Fibonacci retracement. Now, so what's happening? So we just say we are now in the third wave. That's all. You can continue to extend more. Because if you go, this is it, you see now. So you want to be very careful. One thing also you can do when you are using the moving at 20 is that you need to be very careful, all right? You need to be very careful when you are selling above the moving at 20. That's what we need to say to you. Unless the price is at a target level or a resistance level, so it will pull back near the moving at 20 and people will try to buy it again along the moving at 20. So when you are selling above the moving at 20, it's always tricky. So people are calling the top of the market. So you see here it went up above the third wave. Just people say probably it will end here. Yes, that's normal. When you were here, people were thinking, okay, probably that's the end of the third wave. Fourth wave, people are thinking the fifth wave, but it's just going up, going up, going up, and we stay above that 20 up to now. Where is it going to stop? It can keep going up more and more until one day it will come below it, as it did here. All right, you see now? You see it? Yes. Now you see, So now I'm applying a Fibonacci retracement to that long third wave. I'm choosing my wave carefully, attention traders. If this is the end of the third wave, it can continue to go up more though. But today, if this is the end of that, I'll put it somewhere here so you don't think that this is the end yet. It can continue to go up. But if this is the end of the third wave, we'll expect a pullback, all right, even up to the 38.2% Fibonacci retracement of that third wave. Doesn't mean that definitely will come there, but it can come there. The fourth wave can retrace 38.2% of the third wave. But because this stock is very bullish, don't be surprised if you find a support somewhere near the median line of that red Pitchfork tool, and then start running away one more time as the investors, okay, are rushing, okay, to buy in one more time. Okay, now you are wondering, George, what's all those lines on the chart? Did you wonder that? Oh, okay. If you are wondering, I can explain to you. It's a Pitchfork tool. For new traders, go to www.dayprotrader.com, click on untrue Pitchfork tool, and read everything. Don't read anything else on the web. It's all blah blah blah. I'm telling you now. All right. Or children say, Joe, you are arrogant. You're too proud of yourself. Yes, you should be proud of yourself a little bit, yes or no? Okay, what I'm saying to you, we need 3 points to draw the Pitchfork tool, which I did here, all right? Okay, so 3 points. So top of the first wave, lower part of the second wave. With those 3 points, we draw our green Pitchfork tool. All right, we see the green one. Okay. And then all we do, we just measure the width of the Pitchfork tool and keep projecting it up. First projection, bringing us here. The median line of our new channel is the pink one here. It goes above it, we keep projecting it again. You see? And the median line of that second projected channel is the blue one here. And again, it goes above it. Okay, we project it again. This is what we call market geometry. I'm talking about market geometry and Andrew Pitchfork tool at Day Pro Traders YouTube channel. So you want to subscribe and check our playlist relating to market geometry by that channel, Day Pro Traders, and also Pitchfork tool by the same channel. All right. Nowhere else. All right. Now, okay. So where are we now? We are now in the third projected channel. So our first projected channel is this one. The second projected channel. Now we are now in the third projected channel. So when professionals see that the stock is on the monthly chart reaches the third projected channel, they are very careful because they know that it won't go out forever. And now look where it stopped on the median line of that third projected channel. All right, is that the end of the third wave, or will it push it more? We will see. All right, so you just want to draw your key levels, all right, especially on the monthly chart, your channel. And I have here, you may wonder also the red Pitchfork tool. All right, you may say, yes. There's a red Pitchfork tool, well spotted. And I leave it there where I left it there because I use another 3 point, the low of the first wave, the top of the first wave, and just this point here. Those lines allow me to draw that Pitchfork tool, all right. Since 2006, you see here, 2006, 2007, where you bond that time, right here, okay? And look, the price came inside that red Pitchfork tool that I left on the chart. You see, hit the top, pull back on the edge, and it started running away. Look at that. So you see the advantage of leaving those Pitchfork tools on your chart because they are the path. And the trading software, the trading algorithm, what I call artificial intelligence trading tool, they know about those paths. And the price, this is a path for the chart. I talk about this at the Day Pro Traders. Yeah, so here, it went out hit the top. So you know that the professional are watching that, isn't it? And then they pull back again, they stop at the low. Hey, look at this one. They brace above the red one and they retest it here and then they took it. See how the price is acknowledging all the media line, all these channels. So that's what you want to do. Very simple. You see here? Now we are here. And as he hit that media line, you see, I'm on the monthly chart. You see this one? Can you see that? Or you want me to go to the daily chart so you can see what is happening there. You see? I came to the media line of the third projected channel, and he said, oh, I couldn't take it anymore. Look, this was resistance is acknowledging that media line of the third channel consolidating. That's what the price will do. You try to consolidate at a resistance zone, acknowledging. So what is happening here, people are selling at the top of the consolidation and they are buying at the low of the consolidation. It's a resistance zone. See, break below that all right, channel, we project it down, mark a geometry, draw the line, the media line, and trade at a hot spot trading zone. Will it come to the moving at 200 on the monthly chart? Yes, there's a high chance I will do that. Okay? This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It's primarily for the TSTW24 traders. I hope you have learned something from this video also, and we put into use, okay, to improve, okay, your area wave trading, and most importantly, okay, to become a better area wave trader. If this video has been truly useful to you, please let us know by giving us the thumbs up. If you dislike it, be sure to mark it down. If you think it's an essential tutorial that can help other area wave traders, feel free to share it on Tumblr, Google+, Twitter, and also on Facebook. If you have not yet subscribed to our channel, please subscribe to our channel today. It is free. All right. For those of you who are watching this video on Facebook, our YouTube channel is 24 Elliott Waves, digit 2, digit 4, Elliott Waves in plural. If you are wondering which one is our Facebook page is stochastic-market. All right, so you can track me and know what something, because sometimes I'm posting video first on Facebook before posting it on YouTube. But you are more likely to see me on YouTube, but I'm quite active on Facebook lately. All right, so this is it. All right, have I covered everything? Any questions? Or I put in the comment section, and in due course I will be recording another video to answer your specific question. The financial instrument that we were analyzing today is the Bullish cow, all right, United Health Group Incorporated, EPIC UNH, Uniform November Hotel. Very difficult stock to sell, especially if it stay above the moving average 20. Before you run away, all right, let's talk about high probability trading setup. As I've been doing at the end of each video, I am recommending and also putting my reputation online by recommending the Trade Idea trading software for those of you who are struggling to pinpoint high probability trading setup. Is this something that may help you? All right, check out the description section. I'll put the link there for you. All right, that will be helpful for us. Don't Google it, go to the link. All right, that will be useful to us, so you are helping our channel also. All right, thank you for watching, and we will speak to you soon. Happy trading to you all, and I will speak to you soon.